Oh, yes. It is pretty amazing what just a few days off can do for the soul, isn't it? Well, today I finished with a great result. I'm happy on all counts. I've reversed all the trends that I was worried about last week. And so after taking Thursday and Friday off of last week, I've come back and I've not exactly hit it out of the park in terms of P&L and ROE, but I really feel happy about what I did today. And what I didn't do today. I took my last trade. All three of my trades today were pre-market. And after that, the setups vanished and I stayed patient. I did not keep trading. And then a couple of halts showed up later in the morning and I was ready for them. I had all my plans ready, but the trigger never took place and I didn't force trades. And so, as a result of all that stuff put together, I'm extremely happy with this day. So before I get into the charts, here is a look at the stats from my three trades today there. They're highlighted at the bottom. And you can see my smallest winner was a 9% gain, 9% return on investment. So that was great. I'm really happy with the metrics on all of these. And something else I want to point out here on the right-hand side, you'll see that I didn't even come remotely close to using margin today. In fact, the most I ever put on a trade was about half of my current account equity, not even buying power. So I'm really happy about the fact that this result came out of such a small investment. So the only one that I traded today was JAN. You can see all my entries and exits are visible on this 1 minute chart that I've extended. And so we'll go through them one by one and I'll explain exactly what I was thinking. So my first trade was one that actually had quite a few things go wrong with it. I'm not going to talk about that right now. I'll just run through the three trades to start, and then I'll explain exactly what I had in mind on my first trade and why things went wrong. So as you can see, I took a 250 share starter at 369 and I then added to it at 425. And that 425 fill was a lot higher than I wanted it to be. Now, as is always the case, I look to sell around half the position, about halfway to my target, right around natural resistance lines, so that if it fails and goes back down, I at least get a green trade out of it. And so that's what I did with this exit here for 200 shares at 444. I then sold half my remaining position at 468. And then sadly, I bottom ticked the last piece at 461 when I thought it was about to break down. And as you can see, I was completely wrong on that last exit. It bounced off 460 and went all the way up to a new pre-market high at that time of 514. And my next trade on it followed this period of consolidation, which was looking really strong in the 5 minute. And so I took an anticipatory entry on this one, looking to scalp between 5 and 550. And you can't really tell based on the charts what was going on at that time, but what I saw on the level 2 was what I call the calm before the storm. And that's when a stock with large spreads starts seeing the ask orders get pulled out while at the same time bid orders start filling in. And that's what I was seeing here on the rise up from 479 up to 495. And so I took another 250 shares at 494. Not really 100% sure whether or not I was going to add for the break of $5. Now, as it turns out, I did not add past $5. I just held that 250 and I sold half the position at 534 and then the other half right at 550. Now, almost as soon as I exited that second trade at 550, I thought, nope, that was the wrong decision. And so I ended up getting back into this, which looks on paper like a revenge trade. But really what it was a reaction to all the bid support that I saw flooding in. And even though there were quite a few selling orders on the ask side, I did see them get chopped through over and over. And so I thought, okay, well, let's continue this scalp mentality and see if I can get up to the break of $6. And what I decided to end up doing was just risk off 550. So I took 250 shares at 560 and I was only risking 10 cents. So I did not intend to ever really add on this, even though looking back, there was a pretty good spot where I could have done that. In any case, I sold the first half just below $6, once again taking insurance against a drop back down. And in this case, we did get the drop back down, which was a little bit more intense than I had expected. We got all the way back down to 552, which came very close to triggering my stop for the rest. That didn't end up happening, however. We kept seeing bid support come in, and the thing ended up ripping all the way back up into the sixes. And what I did on the second half was put out a sell order at 629 in advance because there was a seller at 623. I wasn't 100% sure would break, but that I knew if it did break, it would probably pop up pretty quickly. So I tried to undercut the next level at 630 and put the order out at 629. And what ended up happening was just the bid jumped up all the way to 635, and that's why I got filled at 635. So now I've advanced the chart to just before the bell. This over here on the right side is the last candle before the bell. And what you can see is that following my last exit here at 635, the action got a lot more choppy. The volume was descending. There wasn't really a clear push in any direction. And if you look down on the 5-minute chart too, what you'll notice is 12 green candles in a row. And so at this point, I thought, well, the action sucks, and we're clearly due for a reversal here. So I don't really plan on touching this thing again until after the bell. And at the bell, JAN pretty much just disintegrated. It hit a high around the 7s. It kept trying to break through the high and could not, and was met with repeated false breakouts and huge rejections. So I never got involved with that one. And so I was just about to wrap it up when I saw a couple of halts all of a sudden start taking place. So the first one was on DMPI here, which we're looking at, and it halted at 104 on a news release that happened about 2 minutes prior to its halt. And during the halt, I saw this thing gapping up quite a bit, and I thought, okay, this looks like a really good resumption setup where I could possibly ride this thing up to 150. And then I thought about the one on Friday. I forget the name because I wasn't there, but I do remember seeing there was like a 400% runner on Friday around this same price range. And so I started thinking, well, this could be sympathy from that move. And because of the news catalyst, it does have the potential to really move up. And what ended up happening is it resumed at 104, which was exactly the halt price, and went down to $1 before surging back up. And I basically just missed the entry. I didn't really like the thickness of the level 2. There were, like 100,000 share sell orders all over the place. And I don't like playing level 2s that are that thick. And so I left this one alone, and even though I could have made money on it, I'm totally okay with that decision. And the other one that I saw was PECK, which came out of kind of nowhere. You can see here at 947, it got halted on super light volume. I mean, there was a total of maybe 10,000 shares throughout the day, and it was halted at 326. It then resumed and squeezed up to 410, where it then halted again at 953. Now, the problem with this one is that I wasn't paying attention. I was looking at DMPI, which I thought had greater potential. And because of that, I ended up missing what turned out to be a pretty clean resumption. So coming out of the second halt, it resumed at 410, hit a low of 402 briefly, and then squeezed all the way up. And you can see 2 minutes later, it was hitting a high of 543. Now, I did see this around, I think 425 is when I started to notice it. I decided against taking all the chasey entries and expecting a third halt. Even though I did like the volume that was suddenly coming into it, I really didn't like the fact that it still had really unpredictable spreads and price action after having halted twice already and after seeing additional volume come in, which should tighten all that stuff up. And none of that happened, and I ended up just leaving this one alone. So at that point, I took a look at my trades, I took a look at my daily result, I took a look at the situation in the market, and I just thought, you know what? Let's cut this off here. I was happy with everything so far, and the last thing I wanted to do coming off of, a period of inactivity is to get overactive on the very first day back. And today I felt like I kept it pretty close to the vest. I was very patient, as I just described. I let a couple of halt resumptions go where, yes, I could have been profitable, but I also, could have started making the same types of mistakes that I was really unhappy about last week. And so instead of taking the risk of doing that, I decided to just cut it off. So before I get into analyzing my daily results, I do want to point out some of the things that went wrong on that first trade on JAN. So what I've got up here in the middle is my entry and exit calculator displaying what I had in my mind going into this trade. And the key piece of information in this situation is the add-on at 380, which is one that never happened. And if I go back to the chart, you'll see there's a bit of a flat top here at 380 because at the time there was a substantial seller, at least given the volume, at 380. And so what I ended up doing is using my level 2 to type in the information, and I tried to buy using my level 2. And sadly for me, I missed that entry, and I decided not to take it at the higher price levels that I had available at that time. I decided, no, we're too close to $4. Let's just wait for the break of $4, take a single add-on of 125, and then just ride that 375 shares up to the intended targets. And what you'll notice about this add-on here at 425 is that it's quite a bit higher than my third add-on target that I just showed you. So the difference here in my add-ons is I just cut out the middle one. I just decided, nope, never mind that one. We'll just take this one at 405 and then we'll see what we can do from there. And as it happened, I got a lot of slippage. As soon as $4 broke, the next price level up was 425, which was about 20 cents higher than the slippage I thought I would get. And the reason I got that slippage is because I used a hotkey to take that add-on. I hit Control W, which is buy half a position. And the reason I used a hotkey is because I missed the add-on at 380 because I used the level 2. So what happened here was like I made mistakes on both fronts. I tried to use the level 2 to add on at 380, didn't work. I then tried hotkeys to get the add-on at 405 and make sure that I got it. And instead of getting it just above $4, I got it at 425. And the effect was that this brought my average up quite a bit higher than I had intended from the start of the trade. And so what I'm doing right now in the middle window is playing with the different entries and exits that I could have got. For instance, if I had used a hotkey for the add-on at 380, perhaps I would have been filled at 385. And if I had used a hotkey once again for the break of $4, well, we must assume that I would have got exactly the same entry. So in this case, my average would have been 387 on 500 shares. But before I took this one, my average would have been 374. And what ended up happening is my average turned out to be right around 387 with just these two entries that I actually took. And on the exit side, if we look down here, you can see I used the actual exits that I got for the first two, and then I assumed that I would have held the rest up to 490, which was my back of mind target going into the trade. But even if we switch that to 461, which is my actual third exit, you'll see that I still left about $90 on the table on this trade. But now I've put back in the original numbers of where I really wanted to get all my fills. And if we take a look at this, we can see, the net P&L, the intention here on the back of my target was about $400. And starting from a risk level of $70 on a failed first entry, I still actually got more than 3-to-1 on this trade. I booked $234 in net profit on my first trade. But I think it's important to also look at the what if scenario of what if I had executed perfectly on this. And in this case, this is the result of what if I would have executed perfectly. So despite the problems that I had on that first trade, despite, the weird fills on my entries, not being able to get 500 shares the way I wanted to, I'm still happy with it. As soon as I closed that trade, I saw myself with a P&L of over $200. I thought, yes, this is exactly the kind of thing that I want to start my morning with. And something that I think is extremely important here is that my exit, even though my third exit on that first trade was unfortunate in that I bottom ticked it, I would have preferred it to happen on this candle here at 8:46 a.m. But I think a really, really important piece of information in this trade and the way this day happened, the like pivotal moment, was not holding anything through this period here. I think this chop is exactly the kind of thing that tires me out and makes me less focused going into the next leg up. And in this case, because I didn't have to hold a flyer through this area, I was able to perfectly predict the next leg up, and I was able to capture a scalp that I honestly think I would not have captured if I had to hold through this period of consolidation. And so I think the key difference between today and previous days, at least recent ones, is that I predicted and captured something. Lately, it's been a lot of knowing what the future is going to hold and then just completely botching the attempt to capture it. And I think one of the key differences are my hold times leading up to the next trade. I got in and out pretty quickly on my first trade, even though that was the longest hold. And on the second one, I think the reason that I was able to predict that and capture it so well was because that I didn't have to get tired out by all this tape reading. I was able to go outside, take a breather, come back, and then see the setup and then be like, okay, yeah, it's time to go. And I think that's really an area where I failed myself in previous days. So despite the few things that did go wrong today, like I said in the beginning of the video, I am very happy with my actions today. And I'm especially happy about how I absolutely destroyed every single one of the negative trends that were developing on my daily results. So in the last 4 days, which have all been green, you can see that I had 3 days in a row with descending accuracy, 3 days in a row with descending ROE, descending profit, But at the same time, I was increasing the number of shares I was trading, and I was also increasing the number of trades that I was taking, which to me is the biggest warning sign. When I saw profit descending and trades increasing, I thought, okay, this is really a bad sign. And that comes really from knowing myself, and knowing myself in turn comes from having tracked my results and having, written about my progress so religiously over the course of my education. And on that note, I will also point out that my weekend was basically a 3-day bender. From Thursday night to Saturday night, I just went out with friends every single night. We ate together, drank together, and all together took part in quite a bit of debauchery. And that sounds like a negative thing on the surface. It should be, oh, discipline, work, work, work. But because of having tracked my results and having written and recorded, my feelings and what I did the day before, what I ate, etc., I know with all kinds of certainty that I perform a lot better when I've had fun in the recent times. I can't go a certain period of time without enjoying myself and going out and taking part in social events. And in this case, I had a weekend all the way full with social events, and I kind of backburnered a few work projects in favor of doing that. And I really do think that that contributed a lot to my performance here this morning. I guess, I'm speaking a little bit early. We'll see how the rest of the week goes. But for now, I'm really happy with that decision. And I feel like so far, I've confirmed that it was absolutely the right decision. So that's going to be it for this video. I certainly am looking to continue this type of thing into the rest of the week, even though it is going to be a short week and there will probably be some volume issues. I do really like what I'm doing so far today, and if I have to take the rest of the week off as a result of no trades days, that's perfectly okay by me. So until next time, guys, this is Alex saying happy trading.